Hi again. This is our fourth episode speaking about accounting, and I'm here with Amar. Hi, Amar.
Hi, Muhammad. How are you doing?
Very well, thank you.
Yeah, thank
In
you.
these three episodes, we have heard from you lots about accounting, and also I wanted to mention and I wanted to edit. Amar is a chartered accountant. Sorry, I said some anything else. I think chief accountant. And yes, if you're ready, let's ask from you more questions to become clear. There's more aspects about the
Sure.
accounting.
Yes, sure, Muhammad. Sure. Go ahead.
Okay, thank you. So, my next question is, can you share a simple way to determine whether we're living within our means?
Yeah, sure, certainly. One simple way to determine whether you are living within your means is to create a regular view, a personal budget. Here is step-by-step guide to how to do it. First step, we can calculate your monthly income. You will create like a list of sources of income of your income which you receive each month. This include like your salary, rental income, side gig earning, or any other regular source. The second step, you can create a list of your monthly expenses. Here you can make like details list of your monthly expenses, categorize them into essential expenses needs and non-essential expenses wants. Like some common expenses categorized like essential expenses like rent, utilities, grocery, transportation, insurance, loan payments, healthcare, and another non-essential expense like dining out, entertainment, shopping, gym membership, vacation or traveling to distinguish between the essential and the non-essential. The third step, you can calculate your total income and the expenses. Add up your total monthly income and the total monthly expenses separately. The fourth step, compare your income to expenses. Compare your total income of your total expenses. If your income exceed your expense, you are living within your means. if you if your expenses exceed your income, you are living beyond your means. The fifth step, adjust your budget. If you find that you are living beyond your means, it is essential to make adjustments to your budget. Look for areas where you can cut back or the non-essential expenses or find a way to increase your income. So you have two ways. The sixth step, you can track your spending. Keep track on your daily spending. That's very important. To ensure you are stay on budget, you can use smartphone application. I think we'll talk about this kind of application. It's very easy to reach about this application. Or spreadsheet, as we said in Google, let's say. The seventh step, review and update regularly. Your financial situation may be changed over time. So it is important to review and update your budget regularly. Make adjustments as needed to accommodate changes in incomes and expenses or financial goals. By following these steps and constantly tracking your income and expenses, you can get a clear picture of whether you are living within your means or if adjustments are needed to achieve financial stability. Living with your means is a fundamental principle of financial health and can help you avoid debt, save for your goals, and reduce financial stress. That is the most important point. I hope I give a good explanation about this.
Yes, thank you. So the issue is that we should specify that we live within our means or live beyond our means, yes, or
Sure,
over.
sure, sure. Very important to distinguish.
Yeah. Thank you. Very good. And what are some practical ways to detect potential financial scams or fraudulent activities using basic accounting insights?
Yeah, good question. Always you give good question, Muhammad.
Thank
Detecting potential financial scams or fraudulent activities using basic accounting insight requires and attention to details. Here are some practical ways to identify red flag or protect yourself from financial scams. Like number one, you can review your financial statements regularly. Routinely examine your bank statement, credit card statement, investment account statements. Look for any unfamiliar transaction or charge. Number two, you can check also unauthorized account access. Monitor your online accounts for any authorized access or change in login credential. If you notice any suspicious activity, change your password immediately.
you.
Number three, be aware of finishing email. Be conscious about emails asking for personal or financial information. Scammers often impersonate banks, government agencies, or trusted organizations. Check the sender's email for to avoid all clicking on suspicious links or download any attachments.
Mhm.
There is a lot of points. Another point: pay attention of tax scam. Be conscious about these calls, emails claiming to be from tax authorization, such as IRS. Tax scams often involve threats or request immediate payment. So another thing also, be aware or be conscious about educate to educate yourself on common scams. Like stay informed about common financial scams like fraud scams. Knowledge is the best defense.
Mhm.
Report to suspected scam. If you encounter a potential scam or fraudulent if activity, report it to the appropriate authorities, such your local law enforcement, the Federal Trade Commission, like that, or relevant regulatory agency. So remember that scammers are consciously coming up with new techniques. You got my point.
Mhm.
So stay updated, stay informed about crucial basic accounting insight can help spot irregularities. So, but it's equally important to rely on your instinct and the exercise caution when you are dealing with this financial matter.
Mhm. Yes, actually, when you're speaking about these issues, I thought about something that might be helpful. For example, if I don't know if in our countries or in our audience countries that will listen to us um, do these things. For example, I thought about two-step verification. This is kind of a secure or financial transactions, and the one who can access to our accounts. And also I thought about a dynamic account, a dynamic password instead of a static password. For example, I have a password for my account, for example 1234, for example 780. Yes, it's some kind of a static, but we can, for example, use some dynamic one. We can, for example, send a request,
Sure,
and
sure. Oh,
it should generate us a password that, for example, it's long for example, 1 minute or 2 minutes. Um,
yeah.
did
Sure,
you?
absolutely, absolutely. I agree with you. Also, the banks, they are giving all of this experience to all investors or all the people who has any bank accounts. They are giving a lot of choices. Sometimes you are using your face as a password to open your account. Also, another thing, you can receive OTP message in your mobile as like confirmation you will do some transaction to another parties. So in that case, you can receive OTP number like more assurance that you are the person who made this transaction. Then you will put this number from your phone at the same transaction. That's more, I mean, more security, more security.
Mhm.
But you know, as I told you, they have like a scammer. Always they have new techniques.
Mhm.
They have new techniques. Always, always they updated themselves.
Yes. As we update ourselves, they'll update themselves.
We have to defend ourselves also.
And and also I'm really curious to know if, for example, if we can talk about it in another episode, using somehow a blockchain system in a
No, no problem.
yes,
I can, inshallah, and I can create like more details about this topic.
yes, very good.
Actually, Muhammad, you are give very good chance to talk about a lot of critical issues.
Thank you. Yes,
Yeah, critical topic also for all the people, even investors, personal, individual companies.
yes,
I
sure.
like that.
And
I'm so happy also to give this information.
thank you. And I think our listeners and I really excited to hear from you.
I hope
Yes.
so. Thanks a lot, Muhammad. Appreciate
Thank you. Thank you. And the next question is, how do businesses use accounting to measure their success or failure? And can these ideas be applied to our personal lives?
it. Yeah. Actually, business use accounting to measure their success or failures through various financial metrics and indicators. These accounting principles and concepts can indeed be applied to our personal life to help managing finance effectively and measure personal financial success or stability. Here is how business use accounting to assess success and how these ideas can be applied to personal finance. First thing or point number one, profit and loss. Profit and loss statement or income statement in business or companies, you use PL or profit and loss statements to assess profitability over a specific period. It compare revenue or income, we can call it the revenue or income, to expenses, resulting in net income or loss. In personal finance, you can create a personal income statement by comparing your income, salary, invests, as we said before, all kinds of your income, to your expenses also, like rent, bills, grocery, all expenses. A positive balance indicate financial success,
Mm,
while a negative balance suggests financial trouble, like what we talked before. More revenue, now success. More expenses, there is trouble.
mhm,
And the second thing, balance sheet. In business, balance sheet show company assets and liabilities and equity also at given a point in time, helping to assess overall financial health. In personal finance, you can personal I mean, your personal finance sheet lists your assets like saving, investment, any properties like your home, you have any other properties, and liabilities like what liabilities like mortgage, loans, student loans, like that. A positive net worth significant or financial success.
Mm-hmm.
This is the second thing. Number three, cash flow statement.
Mm-hmm.
In business, cash flow statement tracking the inflow and outflow of cash, helping companies to manage liquidity. In personal also, in personal finance, managing personal cash flow. Ensure you have enough money for expenses and saving. Positive cash flow indicate financial stability. So balance sheet, profit or loss statement, cash flow statement, the most important three statements to ensure or to check your cash, check your liability, check your assets, check every financial, everything related to financial issue. Another thing is like budgeting. We talked about budgeting before. In business, budget help companies to plan income and expense in future, I mean, facilitating financial control. In personal also, creating a budget to ensure you allocate income effectively, enabling you save and avoid any overspending. And also another thing we can talk about financial forecasting. In business, companies use forecast to plan for future financial performance. In personal also, in personal finance, you can create a personal finance forecast to
Mm-hmm.
set saving goals, planning for major expenses, and track your progress. By applying these accounting concepts to personal finance, individuals can make informed decisions, set financial goals, and measure their financial access, or I mean financial success also, or areas for improvement. Regularly reviewing your personal financial statements and using financial metrics can help you to achieve your financial stability and long-term success.
Mm-hmm. Yes, exactly. Um, Actually, maybe most of us don't pay attention to accounting and to these kind of works that you talked about really
Yeah,
seriously.
details very important.
But also they're really important as, for example, have some goals, some, for example, somehow big goals to reach it, and maybe we make nearer to it. And for example, we earn
Sure,
so
sure.
much revenue, so much income, so we need to somehow manage it.
Track,
Yes,
yeah,
yeah.
tracking and managing.
Yeah, and I think as we do these managing these works that you talked about, we can benefit from these things that you mentioned at the end of your speech. I mean,
Sure,
yes,
sure, sure.
answered of his question. Very good, thank you. And the
Okay.
last question I'm going to ask you, what are the key differences between short term and long term financial goals? And how can accounting concepts help us achieve them?
Yeah, short-term and long-term financial goals differ in their time horizon and in the strategies needs to achieve them. Accounting concepts can play a crucial role in both types of goals. Short-term financial goals. Let's talk about time horizon. Short-term goals typically cover a period of 1 year or less.
Mm-hmm.
For example, paying monthly bills, saving for vacation, building an emergency fund, or reducing credit card debt. Accounting concept playing a good role here, like budgeting. Create a short-term budget to allocate income and the expenses accurately. And the second point, cash flow management. Monitor your cash or monitoring your cash to ensure you have enough fund for immediate needs. Expenses tracking, use accounting principle to track and categorize your expenses to identify areas where where you can cut all of your costs. Profit and loss statements. Assess your monthly or quarterly income and expenses to measure your progress toward short term goals. So, another point also financial ratios, like to calculate debit to income ratios or saving rate to maintain your financial stability. So, in conclusion, short term financial goals during 1 year or less. On the opposite side, long term financial goals, if we talk about time horizon, like long term goals typically extend beyond 1 year and can span several years or even decades. For example, saving for retirement, buying a home, funding to your children education, or building substantial wealth.
Uh-huh.
Accounting concept here playing also important role. If we talk the same points for investment planning, use accounting concepts to assess your investment option or build your portfolio for a long-term growth. Retirement planning, plan for your retirement by estimating your future expenses, income needs, and saving goals. Assist asset your allocation. Applying accounting principle to allocate assets wisely among various investments. And also financial forecasting. Create long-term financial forecasting to protect income and expenses and saving also for major events. And here, how accounts help to achieve these financial goals. In conclusion, budgeting, tracking, investment decision, risk management, tax planning, financial forecasting, the same terminology which we can use to achieve all of these financial goals. For example, budgeting very important role as we talk about it, like accounting based budgeting helps allocate resources effectively to ensure that funds are dedicated towards specific goals. Also, tracking by employing accounting principle for expense tracking and financial statement analysis, you can monitor progress and make necessary adjustments. So, here in the summary, accounting concepts provide individual with essential tools and insight managing financial effectively, regardless of whether they are focused on short-term or long-term financial goals. By applying these concepts, you can budget or track or invest and plan strategically to achieve your desired financial outcomes.
Yes, very good. Thank you, thank you. Actually, maybe as we are become stuck in most lifetime issues, I mean daily issues, we might forget that we need to, for example, invest for retirement. For example, buy some stocks. Buy, for example, we should have a plan or decision for insurance, for example, or many other things. But as you mentioned it, we can, for example, somehow have a plan, make a plan for it, and do this as a right thing that we can, for example, benefit from in later, for example, in long term financial, for example, goals that you mentioned. And thank you for all the information. I
Thanks
think
to
this is the last episode of our accounting, but I think accounting has a more broader knowledge and limits
yeah, yeah,
that we can access.
so
And
widely, yeah.
I hope that these kind of meetings that we can continue it in other issues, for example, like I've mentioned, for example, about We can talk about blockchain, for example,
The
system,
precious God, yeah.
or any other things that you
My pleasure.
refer to us. And I hope you enjoy it. I hope
Sure,
you
I'm
listen it.
so enjoying, to be
Thank
honest.
you.
And also
Um,
my pleasure to for all listeners.
Thank you, thank you. So I think that's all about does it for our meeting today. I'll see you in the next time. Bye for now.
Bye, Muhammad. Bye. See you. Bye.